Why don't we start with your word of the day?
My word of the day is myopic. And what do we mean by myopic? Investors are being too myopic, and they're looking at the day-to-day headlines and not looking at the big picture. This market is trading at all-time highs, and no one's really talking about that. Everyone's worried about, oh, the tariffs this and the next deadline that. Coldplay concerts now we're worried about. But to me, it's the future. And I think the financials are the perfect thing because the market is far from myopic. The market is telling us something. The financials ran up into these earnings, and guess what? They're not running away right now. They're kind of pulling back, digesting their gains, which were huge. And I think the financials are set up to take another leg higher as we go into the year, at the end of the year. And that's why I want to look, over the next few months.
Financials, a broad universe. Your pick for us is Citi. Why one of the big banks, and why that one in particular?
Yeah, and I own J.P. Morgan and Goldman Sachs. So why am I picking Citi? Because I think Citi still has the biggest turnaround story. Jane Fraser, what she's done there, streamlining the operations, bringing in talent now in the investment banking area. I think you look at that from a fundamental point of view, they're really starting to have that tailwind and catch up with some of their other competition. So Citi, to me, fundamentally looks good. And then technically, what a breakout. This stock's trading 92, 93. I think you can easily hit a technical target of 110 by the end of the year.
All right. I want to tell you about the broader markets. I'm going to play a soundbite from you from Thomas Petterfy from Interactive Brokers. I want to get your take on what he has to say about the bullishness in the market right now.
We almost every day we see net buying on at Interactive Brokers. And I think that these institutional investors are left behind, and they will still have to catch up. And that has a great firepower that is still to come. I basically do not see any dark clouds in the horizon. As a matter of fact, I can't think of anything that will stop this rally. I expect this rally to continue for the next 2 or 3 years.
All right, so he sees a lot more bullishness out there, rally continue for 2 or 3 more years. But I do want to ask you about risk when it comes to earnings season and what we're seeing with Netflix today. Netflix beat on the top and the bottom lines, gave strong guidance, and the stock's actually down. Do we have a similar setup maybe for some of these big tech companies that really dominate the market, that they may beat expectations but just not beat it by enough?
Yeah, I mean, look at the run-up that Netflix has had over this last quarter. So pullbacks are natural. For us, there was one stock, Oracle, that actually blew out expectations and continued to go higher. What I like is the guide is solid. So I believe in his thesis that we are in a secular bull market. My words, not his. But I think that we are going to see people play catch-up. And who are the people playing catch-up? It's not the retail investors. The retail investors came into this market. They've been buying the dips. Now institutions will have to catch up. So I think...
Wait, you agree that institutions are behind? Because what are they behind in? They're certainly not behind when it comes to tech. We had the B of A fund manager survey. We saw a lot of bullishness from that as well. So where do you think they're behind?
No, they're behind. Well, look at all the ratings changes that we've had. Oh, we lower our target, we up our target right now. People did not participate on that tariff news when we had Liberation Day and that sell-off. Who were the biggest participants? It was retail. Retail trading is at all-time highs. The institutions, they're going to have to see. We saw at the end of the quarter some markups in some of these stocks, people playing catch-up. So I don't believe, yes, we have a lot of optimism right now, but I still think money is on the sidelines, is going to come into this market, and they're going to have to chase performance. So to me, I think the setup is there. I think the momentum is there, and we're still concerned about the day-to-day tariffs, which are real. Don't get me wrong.
Well, deadline's coming up on August 1st. I want to go to something else.
For now, we'll kick it down the road.
You seem pretty confident. I think a lot of people think that it's not actually going to happen August the 1st. What do you make of those comments from Christopher Waller? It's also important to really note that he's someone who's in at least the running to potentially replace Jay Powell. His comments that we should cut in July. Do you see that as a realistic possibility coming up in just a couple weeks?
Well, I look at it twofold. He may be campaigning for a job there in that sense, but I don't disagrey with his logic. It just comes at a very weird time. I think the table is set that we could cut by 1/4 point. We haven't, where it's sticky inflation, things haven't changed as far as the trend goes. So to his point, I think it was a good thing to say. We didn't have any dissents last time, so I wish he would have been a little more vocal at the last meeting. So we'll see if he can change the tide. But to me, a cut is coming, but not until September.